Good morning, good afternoon, good evening, and good night. You're watching Engine Room, a podcast by Token Metrics. My name's Dylan Love. I'm the managing editor of cryptocurrency research firm Token Metrics. We are joined by an illustrious panel, as we are every Wednesday, of deep crypto thinkers and analysts. We've got Jacob, our market analyst intern. Give us a shout out, Jacob.
Hey, Dylan.
Forrest is our technical analyst guy.
Hey.
Bill's another one of them. What's up, Bill?
Hi, good morning.
And we've got Jad, our quant analyst. Jad, how are you?
Good. What's up, guys?
As there is every Wednesday, we've got quite a bit of news to get through. And I think I kind of want to start off with the news that Opensea has confirmed insider NFT trading by one of its employees. And to put it in a soundbite, an Opensea employee had insider information about which NFTs would be prominently displayed on Opensea's homepage. He would buy them anonymously, watch their value go up like crazy, and then sell them. And he's been caught red-handed doing this, and this has been all confirmed today. So the questions on my mind are, we already know insider trading is completely illegal in the fiat system, but we're talking about art, and furthermore, we're talking about digital art. So it seems like we have two layers of abstraction here that, I mean, are there legal repercussions like this? Surely he might lose his job, but is some lawyer going to come knocking on his door? What do we think?
Well, go ahead.
No, I was going to say, go ahead, Bill.
So this whole idea of insider trading, a lot of reasons people are buying things like, these high dollar projects to get into, exclusive Discord groups. My understanding is the value proposition of some of those Discord groups is that you get a tip as to what the next hot NFTs are going to be. So where are these tips coming from, right? In other words, how does somebody in a Discord group know that this is the next major FOMO NFT project? So yeah, this guy at Opensea may have gotten caught, but I suspect this whole layers of knowledge or insider trading is rampant throughout NFTs.
100% agree. 100% agree. The other thing is, this guy, how dumb is this guy for engaging in this kind of behavior? He's going to lose his job. I'm sure he'll be fine. I mean, if he's working at Opensea at this point, he's probably pretty in on NFTs. He's probably pretty technically capable in the NFT and crypto space. But you just looking at the biggest protocol, one of the biggest revenue drivers in the entire crypto space, Opensea, which has just blown up in the last 2 months. And if you work at Opensea and you've been working there for a long time, you're probably going to make a ridiculous amount of money, and you're just going to get greedy and try to buy NFTs that are going to be on the featured page. I mean, it's just insane.
Yeah, I love the little anecdote about how he was actually caught. It was a Twitter user who tracked down which wallet was buying up these NFTs, and they found this guy's unique CryptoPunk, and then they reverse searched the CryptoPunk to find out his actual identity. Lo and behold, it's an Opensea employee. And now we have a big blog post from Opensea today talking about, oh, we're doing an investigation. We'll figure out what steps to take from here. We'll see.
Lesson to be learned there is that people, you're not going to slide anything sly past the crypto community, because these guys have no lives. These are the kind of guys that are sleuthing through Ethereum addresses and back searching people's CryptoPunks to try to find their identity. You're not gonna pull a fast one on this community.
Yeah, in the future, everyone is a forensic accountant, perhaps.
Yeah.
Well, related to NFT news, I know we should probably talk about Solana being down for more than 12 hours. Jacob, why don't you take this one?
Yeah, so Solana went offline yesterday on Tuesday, September 14th. There was some rumors, people were saying that it was offline and it was shut down by the Solana team, meaning it was centralized, but tweets from the Solana account said that the reason why it went offline is because there was a huge increase in transaction loads, which peaked at 400,000 transactions per second. And these flooded kind of their transaction processing queue, which caused the network to start forking. And this led to excessive memory consumption and causing some nodes to go offline. They tried to stabilize the network, but it was unsuccessful. So the validator community, those who have access to the tokens, who can vote, decided to restart the network. So it wasn't the Solana creators, but it was the validators in the Solana community decided to restart the network. And like you said, it was down for 12 hours and it is officially up and running now, but that was a big hit because you couldn't do anything with Solana yesterday.
It was like the worst possible time for this to happen, because it seems like everybody in crypto has been talking about Solana. How high can it go? How high can it go? Then it starts to crash a little bit. And then shortly after that, lights out on a technical level. So I found an interesting little website. Let me dig up this exact URL. Is solanastilldown.com. So in the
That's
future,
great.
in the future, if you have questions about if Solana's up and running, just check out issolanastilldown.com. And there you go. Right now it shows us a nice clear no. So we'll see what it says in the future.
Now, one thing from this is I think Solana lovers are going to hate me for this. I think that Solana is going to have a lot of trouble putting in a new all-time high after this for any period of time, because Solana just melted up. Solana just 10x'd from $22 to basically $220. I think it peaked at like $218, building zero support along the way. And I'm not saying that Solana is going to crash. I think it's got pretty strong potential to find support at like $108, $110, like a 50% retracement from where it's currently at. And who knows, maybe it'll continue to go up. But the reason I think that Solana is going to have a really hard time starting to put in new all-time highs again is because, for one, hasn't built any support on the way up. It just completely melted up. Everybody that invested in it with any reasonable time frame, that people that didn't just FOMO in once it got over $150, all these people have made a ton of money on it. Well, now with this scare, as Solana bounces back up, from 150 to 180 to 190, 200, people are going to want to take profits. This is scary. They're going to be like, all right, I'm up, 6, 7, 8, 9, 10x on this. And this thing just went offline for 8 hours. And if in that 8 hours you were trying to get your funds out, you wouldn't have been able to. So I think that as we creep back up to $220, if Solana makes another attempt at an all-time high, people are going to be like, well, I'm going to take 20% off the table. I'm going to take 25% off the table, get my initial investment out, and then I can free roll. And if Solana keeps going, but because I think all those people are going to take profits, I think we're going to get a theta situation where when theta melted into the top 10, right, it went up to, I think, like $17, $18. I forget exactly maybe it was like over $20 all at once. And then has just been in this slow bleed out pattern since then. All right. When things melt up and don't make support, eventually it has to come back down and make some support. So I think Solana is going to actually have a tough road ahead in terms of price action. I could be wrong.
Right.
Yeah.
And the thing about Solana is when I heard it was down, because, I was a big proponent on the way up, fortunate enough to tell people to get out at 200. But with Solana, you get what you pay for. All these other layer one solutions. In other words, the reason you pay ETH gas fees is because of the integrity of that network. Mm-hmm. It's like, oh, great. Hey, there's no gas fees. Well, hey, the network could go down. No one ever thought of that. So people are going to have to recompute on all these other layer one solutions.
And the the momentum of Solana's price action, like Forrest mentioned, also slowed down very, very much. Like we've had Solana being picked and indices at Token Metrics since it was trading around $30 to $40, and it was being picked every single day in our daily indices all the way up until the $200 level, where it kind of stopped. And it's interesting because there is like a psychological game that happened in Solana. You were either taking profits along the way when it was going to like $80, you took some profit, or 120, but it just kept going up and up. And there was people who were FOMOing in at around the 180 or 200, and these got hurt. So it was a very interesting scenario that happened in Solana, and interesting to see that confirming the slow and momentum, it wasn't being picked in token metrics indices after breaching the 200 level.
Yeah, gotcha. So as exciting as it is to watch Solana go up and down, this is exactly the kind of thing that a person like my dad watches and he says, not on your life am I going to jump into this market. I don't have the stomach to watch me to gain and lose money like that. But if I might offer a little personal anecdote, as of this morning, dad holds an amount of money in stable coins, and he's got that sitting in an interest-bearing account. A lot of this comes from the fact that he was looking at CD rates. He had a nice windfall that he wanted to sock away and earn some interest on. And he did his due diligence on some comparison shopping on what kind of rate he could get on a CD, certificate of deposit. And the best he could find was 0.7%. And when we talk about things like staking in crypto, this is kind of a laughable percentage. So so dad put his money into an interest-bearing crypto savings account kind of a thing called Abra, which is an app that I turned him on to, that pays 8% interest on stable coins, interest that compounds daily and is paid weekly. I've been an Abra user for a long time, and now good old dad has finally thrown his hat into the crypto market. So I want to give my dad a little shout out there for waking up to the future of finance. He's done really well for himself playing the legacy markets, and he knows what his son does for a living. and now he's kind of riding his comfortable version of a wave right now.
That's awesome. That reminds me kind of, well, one, shout out to your dad, but that reminds me of the recent news that Steve Cohen finally is going crypto. Steve Cohen is a hedge fund billionaire. He's the founder of Point72. He also owns the New York Mets, and he's been kind of a crypto skeptic for a while. And then his son, who's a proclaimed crypto maniac, I guess similar to you, helped change his mind. So this week he announced he was investing in Radical, which is a quant trading firm for crypto. And this was after Recur, which is a tech company that helps develop experiences for fans to buy and sell NFTs, said that Cohen invested $50 million in their Series A funding round. And Cohen also said that his hedge fund Point72 is building crypto trading capabilities at the firm. So it seems like people are finally starting to wake up to crypto. I mean, it's come after a crazy bull market that ended in May, and then kind of the restart of that crazy bull market till now. But I think it's like now is no better of a time to get in than it was 3 years ago. And I know you had mentioned earlier that you said Fidelity started to kind of consider getting into crypto.
Yeah. I mean, when we look at Cohen getting into crypto, Fidelity urging for a Bitcoin ETF, it's just never been so clear that there's increasing institutional appetite for crypto exposure. You know, we talk about the case of like Latin America tumbling like dominoes with them adopting their own crypto regulation to make Bitcoin and other crypto into legal tender. We can almost make the same parallel argument for large established investors. We know Ray Dalio is into crypto. We know Brian Tudor Jones is into crypto. Now we've got Steve Cohen into crypto. The dominoes are tumbling all around the world. It's just a matter of what level, at which level are you zoomed in?
Yeah, I think it was never a question of will institutional get into crypto. I think it was always clear that eventually they will get into crypto, and the point that they were waiting, or what needed to be done before they get into crypto the way they are doing now, is just regulation in the US and in the whole market as a whole. And now that there's more and more regulation, you will definitely see more and more institution flowing into crypto and DeFi especially.
Right. So two things. How many people do you think there are in line behind Dylan's dad looking for yield? Not only retail, but institutional. Like at the institutional level, if you're not getting a set return above 5% in crypto on cash, someone's going to look at you and go, what's wrong with you? And then now, if you look at the Bitcoin ETF, Fidelity's actually been mining it, I understand, and taking it in their lunchroom. I remember that going all the way back to 2016. The reason the SEC is going to approve the Bitcoin ETF is that they would rather have retail investors buying Bitcoin through an ETF than they would having them in DEXs. Remember, they went after Uniswap, which is ridiculous. But the thing is, that makes the Bitcoin ETF probably more likely to happen. It is a hugely underrated future catalyst for probably Bitcoin and ETH.
Yeah, and on the ETF thing, I mean, I think that's honest. So anytime you look at a parabolic run up, what has to happen for a parabolic run up in crypto to happen? Well, you have to kind of have a bunch of dumb money at the top buying Bitcoin and other cryptos. Well, who's going to be that dumb money in this situation? Well, it sounds terrible, but it's potentially the people that buy the Bitcoin ETF, all your regular investors that are being told by their financial advisors, oh, let's, this Bitcoin ETF just came out, let's allocate 5%. Well, 5% times every working person in the US is a lot of, I'm calling it dumb money, but it's money that isn't in crypto yet, right? So if we see an ETF pass before the end of the year, that's the parabolic run up we're waiting for, I think.
Right. I think that's also, it's probably the passive money, right?
Yeah.
Like a long time ago, I used to work at Schwab, and Forrest is right. If everyone wakes up one day and goes, yeah, we really should have 3% of our portfolio in the Bitcoin ETF, those people probably won't be price sensitive. Like smart crypto players may be selling to them, but those people are probably going to buy that stuff. And the amount of passive investors out there that could get involved is enormous. So some people are like, oh, the bull market's over, it's done. But there could be that final run up. A lot of times bull markets, trends can last longer than you think, and they can go a lot farther than you think. So that's something to keep in mind on the ETF front.
Guys, I want to talk about a tweet from Coinbase CEO and co-founder Brian Armstrong. Late last night, early this morning, he wrote, if fiat-backed stablecoins really become inflation coins, which are not so stable, then how will we get a coin that is truly stable? And then he says, perhaps something that tracks a basket of real-world goods with purchasing power parity using oracles, ? Ideas welcome is how he ends. Now, this is a great opportunity for us to plug the Token Metrics Altcoin Quarterly Report, because one of the coins that we cover in the upcoming edition is Olympus DAO's Ohm coin. That's OHM, Ohm coin. Forrest, I kind of want to throw it to you because you're pretty familiar with the technicals of this, but I understand this is a coin that pretty much is doing exactly what Brian Armstrong is talking about in this tweet.
Yeah, I believe so. For the most part, it's pretty spot on. And what Brian Armstrong is highlighting is the kind of the ridiculousness of stable coins or CBDCs, because they don't solve the problem with fiat currency in any way, shape, or form, right? The problem is that the Fed can just go and print a ridiculous amount of money. Now, what this actually solves for them is they don't have to print it on paper. They're just printing it digitally now, right? There's nothing is being solved by this in terms of inflation or monetary policy. So this is actually a big argument. Now, I like Ohm as a solution to this potentially as well, but this also is a big argument for the digital cash case, right? And what I mean by digital cash, I mean digital cash cryptocurrencies like Nano, like Dash, like Bitcoin Cash, right? You can even throw Litecoin in there, even though Litecoin's not my favorite. We've got some other ones that we like a little bit more than Litecoin. But speaking of Litecoin, Walmart, there's a little bit of news, a little fake out on Litecoin, Walmart accepting Litecoin. But digital cashes or digital cash solutions that actually have restricted supplies, right, and solid monetary policies coded into their fundamental base are usable. Yes, they could be volatile, but as long as the monetary supply of them is set in stone and you know what to expect, the prices could go up and down, the purchasing power could go up and down, but that's no difference than the strength of the dollar going up and down over time, right? The difference is there's not inflation with Nano, right? There's disinflation with Bitcoin Cash, right? There's, I don't know Dash's monetary policy, but I guarantee you it's better than the US dollars.
Right on. Speaking of monetary policy, Ethereum, in the wake of the London upgrade on Ethereum, there's news out today that more than $1 billion worth of Ether has been burned since this upgrade. So I'm hoping that some of our technical guys can help put this into simple terms for me and everybody else listening or watching.
So well, Dylan, why does Bitcoin go up in price every 4 years?
It has to do with halving, no? And
yep, the incoming supply of Bitcoin, the mining rewards get cut in half by 50%. That causes a big bull market within Bitcoin and the rest of the cryptocurrency market. EIP 1559 burns a portion of all transaction fees for Ethereum. Now, I believe that EIP 1559 went into effect sometime in August. Since then, as you mentioned, over $1 billion has been burned. The net issuance of Ethereum, the net incoming Ethereum has been decreased as a result of EIP 1559 by 54%. So 4% more than a Bitcoin halving. Now, usually with a Bitcoin halving, you see the effects of that take place, the repricing of Bitcoin take place over the following 6 months to 12 months, right? That's how long the bull market usually lasts, around a year, sometimes longer. Well, Ethereum just had this EIP 1559 go into effect last month, right? So there's an argument to be made that with Ethereum being burned at such a rapid rate, and this halving, for more than a halving happening for Ethereum, that we could see a big Ethereum bull market in the future.
Right.
Go ahead, Bill.
No, there's a psychological aspect to this Ethereum idea. Everyone is talking about gas fees being too high. Everyone is talking about Ethereum killers. Now, I understand there's going to be more than one DeFi NFT highway in the cryptoverse, but no one is talking about this supply thing with ETH. It's all about ETH killers and chasing Solana and Avalanche, but no one is thinking, could ETH actually trade the way Solana did? Right? Can you just wake up one day and go, oh, wow, I missed it? So the potential for FOMO in ETH is as big as it was in Avalanche and Solana.
Yeah, I don't think I'm giving anything away if we say that, generally speaking, I think this company is long ETH, and it works as a store of value on the level of Bitcoin, except it's highly programmable. You've got like an internet inside of it, to make a weird analogy there. This was absolutely part of what I was talking to my dad about today, because now that he's got a whole bunch of stable coins, he's like, well, what's this Ethereum thing all about? Because I hear a lot about that. So my dad's on his way to becoming a degenerate just like anybody else. It's exciting stuff. I think we should probably talk a little bit about this Dogecoin trademark dispute. There is now a big fight over who owns the name, who holds the intellectual property behind the name Dogecoin. And I can't help but laugh at this, because Dogecoin, the crypto that was literally started as a joke that is now worth many, many billions of dollars, seems to have found yet another way to take center stage in public conversations about crypto and what it's all about. I don't know if you guys have anything to say about this. I'll just throw out, like, when we talk about Elon Musk being a crypto guy, what is he really associated with? He's associated with Dogecoin. He's not associated with Bitcoin. He's not associated with Ethereum. Yet here we have a battle, according to the Wall Street Journal as of today, playing out for who owns the term Dogecoin. I don't know if you guys have any thoughts on this?
Well, the thing that's funny about Doge is that when it first came out, like the traditional crypto crowd, you know, sort of like turned their nose up at it, right? You know, it was something that was being bought inside like Robinhood. So there were a lot of Robinhood Dogecoin millionaires, and people who were in crypto were like, oh my God. The thing about Doge now is Doge is not the most speculative, ridiculous thing going on in crypto, right? The whole NFT casino almost bumps Dogecoin up a couple notches. I mean, I don't want to say it's royalty, but it's in the digital cash solution, probably because of Musk. Mm-hmm. So it's funny how, you know, all it takes for something to become legitimate is to come up with something more speculative and seemingly ridiculous underneath it.
Yeah, I mean, as we speak now, Doge is trading at 24 cents, and it had an all-time high of 74 cents in May this year. And if you look at this chart, it kind of is hovering around a penny and less up until February 2021. And that's really where it started entering public consciousness. Then you have this nice little run up in April. I don't know, man. It's just exciting to watch this joke become a serious talking point within the crypto world. At any rate.
The trademark issue kind of reminds me of something that happened late August, when Pepe the Frog's creator kind of destroyed a $4 million NFT project. So this NFT project was called the Sad Frogs District, which was 7,000 cartoon frogs, which looked like Pepe the Frog. They claimed it had nothing to do with Pepe the Frog, but artist Matt Fury, who created the Pepe the Frog, said that this is a copy of Pepe the Frog and pretty much destroyed it. He got Opensea to shut it down. They had netted 4 million in trading volume, with each sad frog was about 450 in ether, and then it was gone just because he said, this is stealing my copyright, my trademark, my art. So it reminds me of, okay, well, he owns the image or images alike Pepe the Frog, but who owns Dogecoin? Can you say any picture of a Shiba Inu that looks similar to the actual Doge meme dog is copying it? Like, is Shiba Inu infringing on Dogecoin's trademark? Yeah. Like, how slippery of a slope is it?
Yeah, we've got a lot of interesting questions left to be answered about how intellectual property is going to work going into the future, especially considering that the technology that we work with at Token Metrics, this is uncensorable stuff. It's as funny as trying to shut down Uniswap. You just can't do it. There's no central entity responsible for it. We are all responsible for it by virtue of participating in it. So yeah, there's interesting times ahead for human ideas about intellectual property for sure. But as far as who owns Dogecoin, I think the creator Jackson Palmer. I think that's a pretty good. I think that's a good argument to be made there. Jacob, any other news items to cover?
Yeah, this one's kind of a fun one. It's a crypto party or crypto NFT party, which is occurring in early November. I think it's November 4th in New York City. So there's a crypto fund called Metapurse, and they're hosting a Dreamverse is the name, NFT gallery and party. So it's a one night only party. And there's going to be a day gallery, which is a gallery of NFTs on digital TV screens, and then interactive experiences from 150 plus NFT artists. And then later that night, there will be a NFT party, which has the same gallery, but then there's also some musicians like Alesso, RAC, Please and Thank You playing. And then the kind of coolest part about it is Beeple's Every Day's the First 5,000 Days. This is the NFT that sold for $69.3 million a few months ago. This is going to be projected on a 3-story hybrid physical and digital structure. So it's the first, what's kind of bringing the attention to it is it's the first time that Beeple's NFT is going to be displayed physically, which is allowed. So, I mean, yes, you could go and save it as a JPEG. You could print it out. You could put it on your wall. You could cast it to your Apple TV. But this is the first time it's actually allowed to be displayed in public. And what's cool also is that there's ticket prices that vary. So it's $30 just to get into the daytime gallery. Then it's $150 or $175 to $2,500 to get into the night party. But you get access to a NFT ticket. So it's designed by NFT artist a lot of money. So it's a really cool ticket. And it's when you first buy it, it's black and white, and then it only turns into a color NFT once you scan it and actually go to the party. So if you can't just buy the NFT or buy the ticket to the party, you can invest in the NFT. You actually have to go to the party and have it scanned for it to turn into the color version of the NFT. And I just think it's fascinating that like the NFT world started off just with like invisible rocks and these Bored Ape Yacht Club, just 10,000 monkeys, and now it's turning into an actual party, an actual like it's bringing it. It's heading into the physical realm.
I think there's no denying that 2021 was the year that NFTs really popped on the map and aren't going away anytime soon.
Yeah, they could wind up as social passports. In other words, in order to display and actually prove that you're cool, you may have to show an NFT.
You're reminding me, Bill, of I won't name the person, but it's a high-placed crypto person who is very, very proud of her rock that she uses as a background on her Apple Watch and is happy to share pictures of it. But at any rate, guys, this is a video podcast. This is an audio podcast. So you can listen to us. You can watch us on YouTube. If you've watched this far, you might as well subscribe and give this video a like. Find us on Token Metrics on YouTube, or do a search for Engine Room in your favorite audio podcasting platform. We are here to pick apart the news of the day and give you an inside look at what we're doing on a daily basis at Token Metrics. If you're into what we're doing, sign up for our newsletters, get yourself a Token Metrics subscription. We'll help you make money in crypto. And personally, I think that's pretty exciting. Anybody have any parting thoughts before we put a button on this thing?
Not investment advice.
Yeah, none of this is. All right. Well, I appreciate you guys listening and watching. Thank you to our esteemed panel, Forrest, Bill, Jed, and Jacob. We'll see you all back here in a week. And until then, stay tuned.